Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DONALDSON CO INC annual report. Donaldson Co Inc. offers a diverse range of businesses and services through its three segments: Mobile Solutions, Industrial Solutions, and Life Sciences. The company's Mobile Solutions segment provides replacement filters for various applications, including air filtration systems, fuel, lube, and hydraulic systems, emission systems, sensors, indicators, and monitoring systems to OEMs in construction, mining, agriculture, and transportation markets, as well as independent distributors and OEM dealer networks. Its Industrial Solutions segment offers dust, fume, and mist collectors, compressed air and industrial gases purification systems, and gas and liquid filtration for industrial processes, and connected services to various distributors, OEMs, and end users. The Life Sciences segment provides microenvironment gas and liquid filtration, bioprocessing equipment, bioprocessing consumables, and specialized air and gas filtration systems for applications such as hard disk drives, semiconductor manufacturing, and sensors to OEMs and end users. In summary, Donaldson Co Inc. offers the following businesses and services: replacement filters, dust, fume, and mist collectors, compressed air and industrial gases purification systems, bioprocessing equipment, bioprocessing consumables, specialized air and gas filtration systems. These products cater to various industries including construction, mining, agriculture, transportation, food and beverage, semiconductor manufacturing, and more. The increase of over 11.54% in Donaldson Co Inc. DCI stock price in the past year can be attributed to several key factors. The company's record fourth quarter and full-year fiscal 2025 earnings reports, which showed significant growth in sales and adjusted earnings per share, were a major contributor to this increase. Additionally, Donaldson's positive outlook for fiscal 2026, with forecasted record sales and EPS, instilled investor confidence. The company's consistent beating of analyst estimates in recent earnings reports also played a role in the stock price increase. Several financial institutions raised their price targets for Donaldson's stock following the strong fiscal 2025 earnings report, further boosting investor confidence. Finally, the company's commitment to shareholder returns through share repurchases and dividends demonstrated its value to investors, contributing to the overall increase in stock price. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, key contributors include the expansion of bioprocessing markets in the Life Sciences segment, mobile solutions such as replacement filters and filtration housings, industrial solutions like dust collectors and compressed air purification systems, and higher sales volume and pricing actions. Additionally, strong market demand in disk drive and food and beverage segments has also contributed to revenue growth. On the decline side, factors such as volatility in raw material prices, unavailable raw materials, labor shortages, manufacturing complexity, tariffs, and a global economic downturn have all impacted revenue negatively. Furthermore, diversification between product lines, markets, and geographies has helped mitigate these effects by limiting the impact of weakness in any one area. Overall, revenue growth is driven by market demand, sales volume, and pricing actions, while decline is influenced by external factors such as raw material volatility, labor shortages, and global economic conditions. Net income and profit margins experienced fluctuations between 2022 and 2024. Initially, net income increased in 2023 compared to 2022, but decreased in 2024. Profit margins also saw a decline from 35.5% to 34.8%. Tariffs were a significant factor contributing to these changes, although pricing increases were expected to offset their impact. Other factors such as competition, customer concentration, and failure to achieve productivity improvements also played a role. The company's debt level and interest expenses have undergone significant changes over the past few years. Notably, total interest expense has consistently increased, rising by $2.8 million each year from 2023 to 2025. This increase is also reflected in the interest expense as a percentage of net sales, which rose from 0.6% in 2024 to 0.7% in 2025. Long-term debt has seen substantial growth, increasing by $128.7 million, 24.9%, from 2024 to 2025. This surge is also evident in the company's total debt, which rose by $212 million over the same period. The debt-to-capitalization ratio has increased from 26.5% to 31.5%, indicating a higher level of indebtedness. However, interest paid has shown mixed results, decreasing by -4.8% from 2023 to 2024, before increasing by +6.7% from 2024 to 2025. Overall, the company's debt level and interest expenses have increased significantly over the past few years, indicating a growing financial burden. The financial summary reveals a mixed performance across various segments and regions. In terms of segments, Mobile Solutions aftermarket subsegment performed well, increasing by $220.6 million from 2023 to 2025. On the other hand, its off-road and on-road subsegments declined. Industrial Solutions Aerospace and Defense subsegment also showed a significant increase, rising by $47.7 million. However, Industrial Filtration Solutions experienced a slight decrease despite still increasing in value. The Life Sciences segment performed well overall, with an increase of $54.2 million from 2023 to 2025. Regionally, the US and Canada saw a decline, while EMEA showed growth. APAC also declined, but LATAM demonstrated improvement. Management is cautiously optimistic about the company's outlook. They expect no significant impact from environmental regulations on capital expenditures, operations, or financial condition. However, they acknowledge global market risks, including tariffs and trade restrictions, which could negatively affect business and results of operations. The company also faces supply chain disruptions, attracting and retaining talent, and manufacturing complexity as potential challenges. Financial risks include currency fluctuations and potential disruptions in capital and credit markets. Management is focused on building resilience through its cybersecurity program. In terms of strategy, the company's core strengths lie in leading filtration technology, diverse business, and global presence. However, management notes that actual results may differ from estimates due to uncertainty about future performance. The company has made strategic moves to enhance its capabilities and optimize its portfolio through acquisitions and divestitures. Acquisitions have been a key focus area for the company, with a specific emphasis on strengthening its bioprocessing capabilities through disruptive technologies. This approach is aimed at driving growth and innovation in the industry. On the other hand, the company has also engaged in divestitures to streamline its operations and reduce liabilities. A notable example of this is the reduction of Purologic's contingent consideration liability by $4 million, which may indicate a potential sale or disposal of assets. The company has a history of paying dividends and buying back shares. In 2025, it paid out $131.9 million in dividends, demonstrating its commitment to returning value to shareholders. Additionally, the company has also engaged in share buybacks, with remaining authorization to purchase an additional 5.9 million shares as of July 31, 2025. This indicates a proactive approach to managing its capital and enhancing shareholder value. Concerns about inventory buildup and supply chain disruption are evident in the company's financial summary. The data reveals a significant increase in days inventory outstanding, indicating that the company is holding onto inventory for longer periods. Furthermore, the net decrease in inventories over the past 2 years suggests a potential buildup of stock, which could lead to supply chain disruptions if not managed properly. That concludes the financial summary for DONALDSON CO INC. Feel free to comment below, and I will be happy to answer them when possible.